welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on alternative energy, and our guest is Dewi, the head of UK and Ireland LIPA research at Refinitiv. Well, this was the scene in central London on Monday. Climate activists blocked streets, kicking off 2 weeks of planned protests against what they say is government inaction over climate change. Several protesters were arrested in scenes this city hasn't seen since before the pandemic. Well, since then, US President Joe Biden was elected on a platform that included a pledge to tackle climate change. That sent shares of the world's largest clean energy ETF into the stratosphere before crashing this year, leaving many retail investors rubbing their wounds. The success of the ETF in attracting funds even created a headache for the index's owner, S&P, which had to rejig the constituents to have more companies, including those not entirely dedicated to alternative energy, such as Europe's largest power utility, Enel. At the same time that clean energy stocks fell, traditional oil majors have soared ahead of a meeting in Glasgow later this fall to discuss the climate crisis. As we come out of the pandemic, it's oil companies, not clean energy, that are among the best performing stocks this year. So how should an investor approach clean energy? Let's find out from Refinitiv's Dewi. Hi Dewi, thanks for joining us. So, despite everything that's going on globally, of course, with efforts to tackle climate change, why have clean energy stocks done so badly this year?
I think there's two elements to this. There's the broad economic aspect, and then it's how that's panned out within the alternative energy stocks themselves. First of all, in broad economic perspective, towards the tail end of last year, we had the COVID or post-COVID, not quite post-COVID, bounce where not just growth stocks but a whole load of value stocks rebounded in the expectation of an economic recovery. As a result of that, oils did well, coal did well, all the old dirty stocks. So in relative terms, with growth underperforming, a lot of the clean tech stocks also did relatively badly as well. Alongside that, with inflationary fears growing, you've got an expectation that maybe rates would go up. A lot of these growthy stocks are very sensitive to rate increases, which can make investors very skittish. Combine those together, a lot of people exited the stocks. The effect on all of this is it very much magnifies the impact on the sector itself. Because to start with, they're small cap, they're medium cap, they're quite illiquid. So, and as you've already talked about in terms of the particular iShares fund, you had a lot of money chasing relatively small amounts of stocks. When that rebounds, again, that's amplified. So you get a big surge up and then you get a big drop downwards because of the nature of the stocks themselves.
An investment in this kind of new energy doesn't just mean the obvious renewable energy providers, does it? Some of the companies in this sector have done a lot better, especially the battery sector. So why is that?
Yeah, battery's been quite interesting. If you look at what you expect to be a diversified basket of stocks that's in a lot of broad alternative energy indices, that's done phenomenally badly so far this year. You look at batteries, you'd think, well, that's even a more niche play. Surely that's going to do worse. It's going to be much more volatile. When you lift the lid on these clean energy batteries, actually what you get, it's stuff full of global car makers, of miners, as well as specialist battery manufacturers and the like. So you get a more diversified play. Alongside that, I think batteries have been problematic for a long time. We know solar works, we know wind works, they're tried and tested technologies. But if you're going to have sustainable clean energy when the sun doesn't shine and the wind doesn't blow, you need batteries. So I think investors and governments are increasingly focused on the fact that this is a side of technology that has to work. So I think there's a long-term play because it's so important and because it's a piece of the jigsaw piece that's missing, it's going to have to work.
So given the technological changes that are coming down the pipeline and of course also regulatory change, are there areas in this sector that investors should be avoiding?
Not as a sector level, I don't think. things to be wary of are companies, whatever the sector, that don't have strong cash flows. Because if we do see inflation coming through, if rates do rise, those companies are themselves going to struggle, wherever they are in alternative energy. Alongside that, at the fund level, the problems we've experienced so far this year, which, as you've said, are being addressed, are because of very narrow baskets of stocks, very limited indices that go up like a rocket and down like a stick. And if that's not addressed, I think it's wary to keep clear of all of that, so because you're going to experience magnified volatility. But ultimately, I mean, I've heard this situation in the market compared to the 1999 dot-com boom. There's a massive difference in that if you looked at dot-com stocks then, you've got, who knows what most of those things did. Certainly looking at the time, I couldn't tell half the time. Now these things have to work. They are going to be supported by governments. They are going to be supported by institutional investors who are mandated to ensure that, just for the ongoing existence of us as a species, if nothing else, that this works. So yeah, you're going to get volatility. There will be failures, but I think this is an important sector that is a long-term investment.
Thanks so much for that.
Thank you.
That was Dewi John, Head of UK and Ireland Lipper Research at Refinitiv. Well, before I go, here are some of the top stories in the alternative energy space. Scores of Extinction Rebellion activists blocked access to Norway's oil and energy ministry before being cleared by police. Around 17 protesters occupied the ministry's reception, while dozens demonstrated outside as part of a 10-day protest against Norway's oil industry. Norway is Western Europe's largest producer of crude and natural gas and pumps about 4 million barrels of oil equivalent per day. AP Moller Maersk says it's ordered 8 new vessels which are able to run on carbon-neutral methanol as part of plans to decarbonise its fleet and meet customer demand for greener transport. The Danish company said it would only order new vessels which use carbon-neutral fuel as it seeks to deliver net zero emissions by 2050. And finally, Spanish renewables group Iberdrola says it's teaming up with US infrastructure company AECOM and others on plans to convert an Italian railroad to run on hydrogen. Iberdrola is working on several projects to produce hydrogen from renewable electrolysis and supply it for various uses, including transport and the chemicals industry. And that's your roundup of alternative energy. I'm Elena Casas, and this is Reuters.